The small business regulation can be a great thing. You don't show any VAT on your invoices. You don't have to submit VAT pre-returns, and you don't have to file a VAT return. So once a year, you don't even have to do the annual return, and you also don't pay any VAT. Basically, you have nothing to do with the whole topic of VAT. Why I still don't like the small business regulation and why I advise most of you against it, I've already explained in this video, which I'll link up here on the right. Here I want to focus on a very central disadvantage, namely the so-called reverse charge procedure. The reverse charge procedure means that it's not the service provider who pays the VAT, but the customer. Normally, if I were to provide a service for you, for example, if I consult you, that would cost, say, 1,000 euros. Then I would send you an invoice, at least if you are an entrepreneur in Germany, with my net amount plus VAT. So for example, 1,000 euros plus 19% VAT is 190 euros, and you would receive an invoice for 1,190 euros. That's the normal case. But there are situations where it's not me who adds the VAT to the invoice and then pays it to the tax office, but you as the customer, and this is called the reverse charge procedure. This mainly applies when, as a German company, you are a customer of companies based in other EU countries. The vast majority of online platforms are based somewhere in another EU country. In addition to Google, Facebook, and Amazon, this also includes Etsy, Airbnb, Upwork, and so on. All of these companies are based somewhere abroad, usually located somewhere in the EU, like Luxembourg, Ireland, Cyprus, or wherever else. And whenever, as a German company, you purchase anything from these companies, be it license fees, advertising services, or whatever, you receive an invoice that is subject to the reverse charge procedure. And that means that you will have to pay the VAT for these particular companies in Germany. A simple example. You run advertisements on YouTube for 1,000 euros. YouTube is based in Ireland, or rather Google is based in Ireland. You pay 1,000 euros for this advertising service to Google in Ireland. And in addition to these 1,000 euros, you also have to pay 190 euros, that is 19% to the German tax office. This is the so-called reverse charge procedure, known in German as Umkehr der Steuerschuldnerschaft, reversal of tax liability. In most cases, this is absolutely no problem for you because as a regular taxpayer entrepreneur, you also have an input tax deduction. You pay these 190 euros, but at the same time, you have an input tax claim of the same amount, 190 euros. Your VAT advance return ultimately looks like this. VAT of 190 euros, input tax of 190 euros, 190 euros minus 190 euros equals 0 euros. You don't have to pay anything. That's why it's not a problem. However, if you're a small business owner, you also pay 1,000 euros for the advertising service to YouTube or Google. You still have to pay these 190 euros, the 19% VAT, to the tax office, but you don't get any input tax deduction because as a small business owner, you have no input tax deduction. That means for all fees, all advertising expenses, all expenses you incur with companies that are based abroad in other EU countries, you have to pay the VAT to the tax office in Germany again for each of them. Period. That's it. End of story. You have no right to have this VAT refunded to you in any way. You should be aware of that. And of course, you can still choose to opt for the small business regulation. That's absolutely no problem at all. But then you should know how to actually submit the VAT advance return as a small business owner. And that's exactly what we're going to take a look at now on my screen. So I'll take you along on my laptop and we'll just click through Elster Online together. Because as a small business owner, you have an additional problem. Not only does the tax office bother you and want an extra 19%, but the software landscape also lets you down. I don't know of any online accounting program where you can submit VAT advance returns as a small business owner. But that doesn't mean you're allowed to skip it. You still have to do it. You just have to do it through Elster Online. It doesn't matter whether you use Safdesk, Lexware, or anything else. If you set your account settings to small business owner, the VAT advance return function is usually deactivated, and then you have no way as a small business owner to submit a VAT advance return to report these reverse charge VAT amounts. And that's precisely why, if you have such specific cases, you always have to do it via Elster Online, and you can certainly use this video for that particular purpose. So let's get started. Here we are on the Elster Online dashboard, and as a small business owner, if you want to submit your VAT return, you'll definitely need the forms for the VAT advance return, meaning the periodic reports throughout the year, and then once a year the annual VAT return. And we want to take a look at both, because honestly, both are set up in a very similar way. You can find the forms on the left side under Forms and Services, and then under All Forms. And if we scroll all the way down, we see the section for VAT. That means here we see the forms that are relevant for VAT, including the VAT advance return. The VAT advance return is the VAT declaration that we have to submit during the year, which you also have to do as a small business owner if you receive reverse charge services. Then we select the calendar year, the current year is 2025, and click on Next. We could now also import data, for example, from the previous quarter. If we have already done this in the previous quarter, then it will take over the data from the last VAT advance return. This makes sense because, for example, you don't have to re-enter your company name, address, tax number, and so on. Instead, you can simply carry everything over from the previous quarter, since your name probably hasn't changed since the last quarter. For now, I'll continue without importing data and then see the typical layout of an Elster form. Up here, I can see the 3 steps. First, enter the data, then I can review everything again and then send it directly to the tax office via Elster Online. In the middle here, I see the option to enter all sorts of information. And if I click on this round button on the left, I can also see the structure of the form. So the advance VAT return is divided into 11 sections. We don't need those. Because as small business owners, of course, we submit a very, very simple advanced VAT return. In the end, we really only have a single field to fill out. But what we definitely have to fill in first is the period up here. That means for which period are we now submitting the advanced VAT return? This is typically done monthly or quarterly. Here, I'm going to select the second calendar quarter. I can also indicate whether it's a corrected return or if I want to submit supporting documents.
Normally you don't.
If you're submitting it for the first time, do not mark it as corrected. If you make a mistake on your first submission, you can just do the whole thing again. Simply duplicate it, correct the error, and then check this box. We're not going to do that. You also don't have to submit supporting documents by default. If the tax office wants any documents, they'll request them from you. You don't need to do this preemptively. Then here, there are also details about switching from the small business regulation to standard taxation. But for our standard VAT advance return, that's not relevant right now. And then down here, we enter the state, that is the federal state, and the tax number you receive from the tax office. The tax office will then be filled in automatically, and then we move on to the second section. The second section is about your company's information. That means what is your company's name actually? Designation, last name, first name. If you're sole proprietorship, your company is usually named after you. So just your last name, first name. Then, if you have already received a business identification number, you enter it here. These have not all been issued yet. So if you haven't received one yet, you can simply leave this blank. And then it's about the address. That means where exactly is your company registered? Possibly a PO box if you have one, and the contact information. You don't have to fill this out, but it can sometimes just speed up communication. I regularly enter my email here, hoping the tax officer emails instead of sending a letter if they have questions. Unfortunately, that's never worked, but I'll keep trying. I never fill in the phone number because I don't want anyone from the tax office to call me. And then in the second section, it's about cooperation and consultation. That means if you have a tax advisor, you can enter the tax advisor's details here. This means that if the tax office has any questions, they will contact your tax advisor instead of you. Since you're watching this tutorial right now, I assume you don't have a tax advisor because otherwise it would be your tax advisor's job to fill all this out for you. And if you are a tax advisor, then you really shouldn't need this tutorial. That's why we're going to skip this entire section and move on to the next step. And here we are already at the content of the form. And we're not going to just click through every single step here because for you as a small business owner, most of this is actually pretty irrelevant. So let's take a look at the structure and see what we actually need. And the big problem for small business owners, as I mentioned, is the reverse charge procedure. That means the reverse charge procedure, shifting tax liability, or 13B transactions. Why 13B? Because this reverse charge regulation is simply governed by Section 13B of the Value Added Tax Act. And if we look at the overview here, we can already see recipient of service as tax debtor, meaning reverse charge, Section 13B of the Value Added Tax Act. That means this is our problem as small business owners, and that's why we simply click directly into the fifth section to jump right in. And then we see here that we have exactly 3 options where we can enter information. And for you, in most cases, field 30 will be the crucial one. This is about other services according to Section 3A, Paragraph 2 of the Value Added Tax Act. Section 3A, Paragraph 2 refers to B2B business relationships with a company, the EU. For example, you run advertising on YouTube for 1,000 euros because that's a company based in the EU, YouTube headquarters in Ireland. But as I said, the same applies to Etsy, Airbnb, Amazon, and so on. To Adobe, to Microsoft. In very, very many cases, you have such expenses, and then you actually have to enter the amount of the expenses here. So for example, 1,000 euros spent on advertising on YouTube. That means 1,000 euros in expenses, or in other words, revenue that the business partner has made with you. And then you have to enter the tax base here, meaning the net amount you actually paid, and then calculate the tax on it yourself. In this case, the tax is almost always 19%. That means you take 19% of the amount shown, which in this case is 190 euros, enter it, and then you can see the tax liability that you as a small business owner have to pay. Then for completeness, there are also revenues that fall under the Real Estate Transfer Tax Act. I'll just leave that out at this point. That shouldn't be an everyday issue for you. And then once again, other services. There are always help texts, which aren't always particularly helpful, but just so you've heard it, there are a few Section 13B reverse charge transactions that have a different trigger than international business relations. Construction services are a fairly common topic in this context. So if you provide construction services and work for someone else who also provides construction services, basically as a subcontractor, then the business relationship between you two is actually also a reverse charge service, and you would need to enter that here each time. Another more common example is the cleaning of buildings and parts of buildings. So if as a cleaning company you work for other cleaning companies as a subcontractor, that is actually also a reverse charge transaction, and you would need to enter it here each time. But as you can see, these are more the exceptions. That's why I say in the vast majority of cases, you'll only need to fill out field 30 here once for the assessment basis and once for the tax. And honestly, that's pretty much it. If we now go to the next page, you'll see that it already covers different topics. And in fact, that's really all there is to it. As a taxable business owner, you usually have the option to enter these 190 euros elsewhere in our advanced tax return and basically claim them back. You do this here in Section 7, deductible input tax amounts. Here you can also see, for example, input tax amounts from services as defined in Section 13B of the Value Added Tax Act. The sales you already entered further up in the form could also be entered here. That means here 190 euros. However, as a small business owner, you are not allowed to do that. That's why we have to remove this here, and you don't have any input tax deduction. Because as a small business owner, you're already done, and you can jump to the calculation and then see the calculation of your VAT liability here. At the very top here, you can see the 190 euros. You don't see any deductible input tax amounts, which then leads to a VAT prepayment, meaning an additional payment for VAT for you as a small business owner in the amount of 190 euros. And honestly, that's all there is to it. You then go to the next page, can review everything once more, and then submit it directly to the tax office online via Elster. And very importantly, you won't receive a tax assessment notice. Instead, you must independently transfer the determined amount to the tax office at the same time. So without any request, you won't receive confirmation, you won't get anything. You determine the amount, send it to the tax office, and ideally transfer the amount directly in the next step so the tax office receives the money as soon as possible. Because there simply isn't such a thing as a notice for the advanced VAT return. And that's exactly what you do as a small business owner throughout the year. For each month or each quarter, you submit these reports. Essentially calculate the VAT, pay it to the tax office, and once a year you are then required to submit an annual VAT return for the entire year. That means throughout the year you submit all the advance returns, and once a year you also submit the annual VAT return, which we'll take a look at now. To do this, we go back to the home page, select Leave Without Saving, then go to Forms and Services, then All Forms, again to the VAT section, and here we also see the VAT return. The VAT return is what we do once a year. Obviously, I can't do that yet for the year 2025 because 2025 isn't over yet. That means you can only do it once the year has ended. And then, as a rule, you have 7 months to do it. That means you have until the 31st of July of the following year to submit this VAT return, and then you just click Next here and choose whether to continue with or without data transfer. Then you can select whether you need any attachments. Honestly, in most cases, you don't. So you go to the main VAT form, Virginia T2A. Click Next Steven as a small business owner, everything, and then the structure is a bit more extensive, but essentially very similar. That means we can see the structure of the VAT return here. It consists of 13 sections. Again, here you have general information then assisted in the preparation of this tax return, meaning your tax advisor. Then, information regarding the taxation of small businesses. As a small business owner, you have to fill this out. Here you need to enter how much your revenue was in the previous year, that is, the year before the one for which you are now filing the tax return. And what is your expected revenue for the current year? However, this will change in 2025 because the obligation to file a tax return has generally been abolished if you do not have any reverse charge sales. And the entire mechanism of the small business regulation was also revised as of the 1st of January 2025. That means if you log in now and file a tax return, it's quite possible that this third section will look different or may actually have disappeared entirely. However, there is not yet a form for 2025. That's why I don't yet know what it will look like in the future. So don't be surprised if it looks a bit different in the future. And then, in fact, it's already about taxable deliveries, other services, and so on. That means now we're already dealing with the contents of the actual VAT return. And here we'll just look directly for section 13b again, because everything else is irrelevant for us as small business owners. And here in section 9h, we see the recipient of the service as the tax debtor. We click on it again, and in fact, we see our familiar 3 fields. Of course, they have a different number here, but in the VAT return, it basically looks the same. And let's assume now that these 1,000 euros in advertising revenue, which we already reported in the VAT advance return, were actually the only reverse charge services we received. Then, for the entire calendar year, the amount here would also be 1,000 euros and the VAT amount would be 190 euros. We can simply click on it directly, and with that, it's basically done. And all the other fields are irrelevant for you as a small business owner. We don't have any deductible input tax amounts, unfortunately, still not. But where we should still enter something is in section 13. Section 13 is about calculating the VAT you have to pay. That means how much do you actually have to pay when you file your annual VAT return. And here we see the calculation. We see our 190 euros. And then we see our non-existent input tax amounts. But down here we also see the advance payment due for 2024. That means how much VAT have we actually already paid for 2024? And because we already submitted a VAT pre-declaration during the year for this reverse charge transaction, we've already paid the 190 euros. It would be unfair if we had to pay it again at the end of the year, since we've already paid it. And that's why you enter here the amount of VAT that you've actually already paid during the year. And then it calculates what we still have to pay now, which in this case is nothing, because we've already reported and paid all the sales as part of the VAT pre-declaration. So the annual VAT return is really more of a formality that doesn't actually result in us having to pay any additional VAT. And with that, we've reached the end of the annual VAT return. That means we now click on check everything one more time, review it, and can also submit it directly to the tax office from here. In this example, we wouldn't have to pay anything further. But we have fulfilled our obligation. As you can see, the VAT advance return and also the annual VAT return for small business owners aren't a huge effort, at least if you know where to click and which fields to fill out. If you still have questions about this, feel free to let me know in the comment section and I'll be happy to try and help you out. And if you need an accounting program, a tax advisor who can handle this for you in the future, a bank account or anything else, then take a look at the video description. All my recommendations are linked there, but I'll also link them here again for you. And now it's time to subscribe to the channel, because then you won't miss anything if there are any tax changes, or you can just go ahead and watch one of the other videos on this channel right now. For example, this one or this one.